Do you want your business to grow faster? Are you open to new and out-of-the-box ways to drive revenues and increase value? How do you imagine the most successful entrepreneurs and business leaders double, triple, or expand their businesses tenfold or more? This is a weekly podcast featuring conversations with business owners, executives, and leaders as we reveal behind-the-scenes details that give you, our listeners, the confidence to pursue your own deal-driven growth. On the show, we discuss a huge variety of deals, everything from large, complex mergers and acquisitions, capital raising, joint ventures, strategic alliances, real estate, affiliate and sponsorship deals, and more, including smaller deals that you can do without significant capital. My name is Kupfer, and I've been supporting deal-driven growth for businesses for over 35 years as a successful entrepreneur, professional negotiator, and attorney. My goal is to help you strategize, plan for, find, and complete deals that will help your company grow faster. Welcome to the DealQuest Podcast. Let's get started. DealQuest listeners, this is a solo cast, and for those of you who are regular listeners, you may understand that this is a little out of rhythm, meaning that normally we have 3 guest interviews, a solo cast, 3 guest interviews, a solo cast, so that every 4 episodes is a solo cast. But we are doing this one a week early because this is on the potential impact of the election results on deals. And, we wanted to get it out before the election. Not that 6 days before the election here, there's going to be, much you're going to do differently, but it's an interesting analysis to see what happens. And this was actually prompted by a reporter who reached out to me to speak about this issue. And interestingly, is reporting for Middle Market M&A publication. What he's doing is he's writing 2 articles, one if Trump wins, one if Harris wins, and he's going to publish it actually after the election. So he's only going to talk about the impact of the actual winner. Here, I want to talk a little bit about, what I see in terms of one or the other, or, in either case, the things that may not be affected. So here's the interesting part of this discussion. A lot of the first places that people go, and even, some of the publications out there and the talking points out there regarding the impact of the election on deals. And let me just say a couple things. We're focusing on the impact on deals, not anything else. And we're also not taking any political position one way or the other on this, just trying to look at it objectively, what might happen. Most of the things that focus, the first thing that comes up is capital gains rates, right? In terms of taxes, which is natural because obviously the capital gains rates affect how much, let's say, M&A transactions are taxed for sellers. And there's certainly been a difference historically between Republicans and Democrats' view on capital gains rates. And capital gains rates on the federal level are currently 20%. There have been prior Democratic proposals to push it up to even as high as ordinary income rates, 39.6 or whatever it is. Harris's proposal would be to bring it up to 28%, which is certainly a lot less than going up to ordinary income rates, but it's, obviously higher than the 20%. On the flip side, Project 2025 calls for a 15% tax rate, and Trump has obviously distanced himself from Project 2025, although there are people who believe that that's, really the agenda underlying it. And again, without getting into the truth of politics of that, that seems to be a position at least some folks on the right want to bring capital gains tax down at 15%. So now we have this gap that could theoretically be 15 to 28%, which is basically almost double, right? However, despite all that, my assertion is that is one of the last things you should be focused on if you're looking at the impact on M&A deals in anywhere in the near or probably medium terms. Why? Well, I think, and listen, you can disagree with me on that and do your own analysis, but first of all, for any of these to be passed, you're going to need control of the White House and both houses of Congress by one party. That may not happen. And you potentially may need a filibuster-proof, right? Majority, 60 votes in the Senate, which clearly, will not happen. So it's not that I don't think capital gains rates have a material impact, but I just think it's unlikely in the current split political environment that, at least in the short term, now maybe, you think 2 years from now in the midterm elections, one party or the other will gain even more seats, and you may think that the polls are wrong and maybe there'll be some unusual results up front here. And, and obviously in the longer term, there's more possibility that things may move in one direction or the other. But in the foreseeable future, I think it's probably unlikely that capital gains rates are going to change. So practically, even though there is a difference in policy that could affect it, I don't think it's going to happen. The second thing that you hear about a lot is regulation, and specifically on that with regard to antitrust regulation. And certainly the Biden administration currently, and I would believe that the Harris administration would likely be much stronger on looking at antitrust violations and potentially bringing cases. There's, discussions now about breaking up Google and things like that. And it's likely that if Trump won, that, there'll be much less of that. The reason I say that that's not that impactful for most of our listeners in most deals is not because I don't think that, unlike with capital gains rates, I do think there will be a significant difference in that and the approach to that depending upon who wins. However, what you have to remember is that antitrust violations, an analysis only impacts the largest of the large deals, the big public companies, right? The far majority. I mean, I don't know what the number is, but probably 98 or 99% of deals, which are anywhere from Main Street up to a lot of what we do, which is middle market, right? Lower to middle to upper middle market, and some bigger deals that we do that are maybe higher than that, but that are not public company deals, are not significant, companies that control the industry. I think that's what most of our clients are. That's what most of our listeners are. That's when most of the deals get done. Antitrust regulation will not affect any of those other deals, right? It gets the headlines. It could affect the big deals. Certainly, and that's something interesting. And for those people who play at that level or invest in those kind of companies, that is relevant. But for, the far majority of M&A deals, the antitrust regulation difference will not affect it at all. So interestingly, what are the things that more affect the far majority of deals? And I want to start on a broad level because there's been studies done throughout history which are very interesting, that show that it's actually much more macroeconomic factors that, as opposed to specific policies focused one way or the other, that actually affect the deal market, right? Whether that's number of deals, size of deals, all that kind of stuff, deal flow. So it's things like how is the economy doing, right? Are there other things that create uncertainty? See, uncertainty traditionally is something that causes people to slow down because they don't know how to plan, right? Even if something results in a way that they don't like, for example, let's say at some point capital gains tax go up, the uncertainty of whether they're going to go up or not may either, have people do nothing or may have them actually rush if they think they're definitely going to go up, right? But in terms of how things affect the deal market in the long term, normally what happens is if there's uncertainty in the economy, right, whether it's around interest rates, inflation, or in the world around war, and I know we have, a number of these issues going on now, it will often, or can affect people's willingness to do deals because they don't know what's going to happen. Also, there is traditionally a drop-off in M&A activity and other deal activity right prior to an election because of the uncertainty of what's going to happen there, and then things tend to pick up after there's certainty, one way or the other, in terms of who wins. The interesting part now is that the macro trends, however, right now are positive. I mean, my next solo cast I'm going to do is based upon some statistics that some of the big investment banks have come out with on how much of their revenue and deal flow coming from their investment banking and how much that's been increasing. So I won't talk in detail about that now. You can catch that on the next solo cast. But, it's been positively trending on the big level, and we've certainly seen it in some of the segments we're involved in. Now, there are some that are still depressed. But there's definitely there has been rebound and improvement in deal flow, number of deals, size, et cetera, this year, valuations, et cetera. And part of that obviously is because there's been some of the macroeconomic factors like interest rates coming down, inflation coming down, that have positively affected that. But what's a bigger factor, and I am going to talk about specific segments and specific policies that can affect things, but I want to say, because this has been historically proven to be true, that the bigger factor on the effect of deal flow is the overall environment, is the macro factors, is the economy in general. Now, listen, you may have a very, very strong feeling on what's going to happen to the economy if one side or the other gets elected. I mean, I hear all these doomsday predictions. If the Democrats get elected, everything's going to go to heck. If the Republicans get elected, everything's going to go. Now, by the way, I'm not talking about all the other issues that people are raising in the election, whether they're social issues, the state of democracy, that kind of stuff. But obviously, if you think the whole democracy is going to fall apart, on one side or the other, then yes, there will be an effect on deal flow. I happen to think that the extreme, I'm talking economically here, I'm not talking about any other issues or impact on communities, but economically, I happen to believe that most of the time the extremes that each party is saying on how, whether it's the stock market's going to go to zero or, inflation's going to go to 1,000, or nobody's going to be employed or whatever it is, or, are always overblown. So I think the macro trends are up. I believe that whoever gets elected, at least in the short run and the near term, there's, those trends are probably going to continue. Frankly, and again, you can disagree with me on any of this. I think presidents and administrations get more credit and more blame for what happens in the economy than they really control, and certainly not in the short term, right? The policies, even when implemented, take a while to flow into the system and be effective. Okay, you can disagree with me. If you think things are going to go to heck if one side or the other is elected, well, then, maybe you're not going to buy a company right now because you think, obviously things will go down. That's your choice. But my point is, whether you agree or disagree with me, is that whatever you believe on those more macroeconomic factors has been shown, right? Whatever actually happens on those macroeconomic factors has been shown to be much more of a driver of, what's happening in the deal market than any particular policy from any particular party. Now, let's talk about some of the specific things that, could affect deals, even if it's not day one. I mean, certainly other regulations. So, I mentioned antitrust not being a big factor, right? But certainly, in general, the Republicans are less likely to push other regulation. They're smaller government, and obviously speaking big generalities here than others. Will that affect? I mean, there's an argument certainly that's made on the part of Republicans that higher regulation adversely affects businesses, costs them more money, creates less capital available, to do deals. And, those are talking points. I think you have to do a much closer analysis of what type of regulation you're talking about. But it's amazing how adaptable industries are, to regulation, even though it takes change and issues and money over time. Sometimes it does adversely affect. But when I say adversely affect specific companies, that doesn't necessarily mean that it drives deals down. In fact, for example, in the wealth management industry, additional regulation burden is cited by a number of smaller firms as the reason why they ended up deciding to sell to or merge into larger firms, right? So that kind of regulation, at least anecdotally, is a positive driver for deal flow. Now, you may look at it as a negative driver for business and the inability of the smaller firms to stay in business and handle that regulation. But in terms of deals, regulation sometimes could be a damper on deals, but it also could be an incentive to get deals done. Tax policy is this reporter I mentioned who interviewed me asked less about capital gains rates, but more about the Trump tax cut expiration if it's not renewed, coming up at the end of next year. And, again, that's more in there's not a lot that's in there that is very, very specific to deals, but obviously, your view on the value and the impact on the overall economy of whether that tax plan is renewed, which we assume it would likely be under Trump, assuming that the Republicans control Congress as well, and likely not be under Harris. So what will that affect? Interestingly, I mean, if the SALT deduction comes back, that, positively affects business in certain states, right? Lower tax in certain states, the higher tax, the coastal states and other states. Now, there's been some tax workarounds that, places like New York and California, et cetera, have put in place, PTET and these things. We won't get into them, but where they've tried to, at a state level, soften the blow of the loss of the SALT tax. So, so would there be a big change if that came back in, if corporate tax rates went up, things like that? I mean, again, those things could affect things if you think that they'll put a chilling effect one way or the other, or an incentivizing effect. Certainly, in terms of, let's say, labor policy, there's no question the Harris administration would be more union favorable. I always make a distinction between the company, the workers, and the union, because I have some experience in my very, very early days as management side labor law attorney when I was in law school in part of my first year many, many years ago. And again, not to get into the details of this, but I have found that it's not necessarily the company against the workers and the unions. The union has its own interest that sometimes aligns with the workers and doesn't. But, in general, certainly the Democrats put themselves out as being more pro-employee and no question pro-union. Is there a direct effect on deals on that? It's an interesting question. I mean, obviously, having a union shop usually increases, wages and benefits and costs to a company. Does that make them less likely to do deals? It's possible. I've seen deals actually that are done and incentivized by, there are all kinds of rules on this. You can't necessarily just sell a unionized company to a non-unionized company get out of a union contract. But there are ways that things can be done properly. So even the risk of unionization, especially if it hasn't been a union campaign yet, could be a trigger potentially for a deal. So again, I think we need to, with some of these, even these macro factors, we need to look at, we shouldn't necessarily assume that they're going to affect deals in general, and certainly any particular industry in a given way. They could really push it either direction. You need to do a more detailed analysis on exactly, how that particular change or policy, even if you believe it will have an impact on particular industry, in what direction it would. And let's talk about the specific industries. For example, let's take the easiest one, right? Energy. There is no question that there's a difference in energy policy. So if a Harris administration wins, is it more likely that there will be opportunities for deals in green tech, clean tech, all this solar, those kind of industries? Sure. There's probably going to be policies that will further support those, whether it's tax, incentives, et cetera, assuming, again, that they can get passed through Congress, or at least it'd be, less of a threat that the existing programs would go away. Whereas the Republicans and Trump are much more, much less favorable to that and the arguments of climate change generally, and much more supportive of what would be considered older energy sources like, fossil fuels. So there could be more opportunity on the fossil fuel side for investment and for deals to happen if there's a Trump administration, in place. So that's certainly an area where there's a clear difference between the two, and where there might be more energy or opportunity if one or the other wins, for example, in energy. Obviously tariffs, all right, that's a big difference with, if Trump wins, things becoming much more protectionist, again, assuming that they get in place and passed and campaign promises are fulfilled and all that kind of stuff, which is always a question on both sides, right? But certainly if, for example, heavy tariffs are put on Chinese goods, that creates, it can create other economic issues, right? It can create macroeconomics of prices going up. It can, create higher prices on consumers. And again, I'm not raising these things to take a political position on them. I'm just saying that, for the people who believe that could be adverse, then that could go against the whole, overall economy thing that could affect deals. But certainly, in the micro viewing, if Chinese goods become a lot more expensive, that might create more opportunities on a micro level for companies in the U.S. in those industries to be able to be more competitive. And maybe if somebody really believes that's going to be put in place, there's an opportunity to invest in or purchase companies that's poised to be favorably impacted by a tougher tariff policy if a Trump administration comes in. Now, maybe if everybody believes that the price of that benefit is already priced into what a seller or investor wants, but that's something, to look at like anything else, right? In the public markets, often stock prices are more related to investors and analysts' expectations as opposed to what is. So, things get priced in before they actually get announced, like earnings reports, right? So, if somebody thinks that a company's going to be up 20% in earnings, and they'll price that into the market before they announce it. And so if they announce 20%, usually the market stays the same. If they come in at 10%, there's disappointment because they still have grown, but the expectation was higher. So, that could happen in the private markets as well. If people are anticipating, an upswing because they're currently having more trouble competing against foreign goods, Chinese goods, other foreign goods that become less economical. Maybe they priced that in already, but maybe there's opportunities there, right? That would come up. So some of these specific policies can certainly affect deals in the short and, more so in the medium term. It's very possible that your view of the economic factors overall will influence much more your view on what would happen with deals in a Harris or a Trump administration going forward. The final thing I'll say is that, in the conversation of those macroeconomic factors that affect things the most, we've seen that the drop in inflation and the drop in interest rates certainly, and I think if there's another interest rate drop, it'll really make a difference. Further difference, because then the market will see that it wasn't a one-time drop and the Fed's continuing to drop interest rates. I think those trends will help deal flow no matter who is elected. And listen, both the Democrats and the Republicans are aligned that they want inflation lower, they want interest rates lower. There's no question on that. So it's not a matter of their intention on that. The intention is both in a positive direction that will help deal flow. It's much more, I guess, who you believe will actually be successful in that. If you think that inflation will come back, because either, Trump's going to put tariffs on, that's going to bring prices up, or, Harris's economic policies in terms of giving some additional child credit tax or money to startup businesses or any of the other policies or whatever you think is going to trigger inflation again, then, that could be a factor in your decision. But at least the stated intention, and I'm sure the true intention of both parties is to keep those two things low. And if either of them achieve that post-election, that certainly will be a helpful factor for a successful deal market. Cost of capital coming down, right? Inflation coming down, which will help the economy. So that's what I've got for this week. It's the election is 6 days away. It'll be interesting to see what happens in terms of not only who wins, but to follow through how that impacts the overall economy and how any particular policy that gets implemented does affect the deal market. And we will obviously continue to monitor that. Until next week, folks, I hope you have a great week, and we'll be back with a great guest next week. Take care. Thank you for joining me on this episode of DealQuest, where we help you understand how deal-driven growth can be your ticket to freedom. I want to invite you to a unique way to tap into the wisdom and experience of the DealQuest community. The Deal Den is a place where entrepreneurs, high-level executives, and business leaders come together, support each other's growth and success, and share what's working best, as well as what challenges we are facing right now. You will get input not only from me, but from all of our members. We collaborate and serve each other. To join us, go to corykupfer.com/dealden. I'll see you there. I'm Corey Kupfer. Until next week, wishing you the freedom and financial prosperity that I know your DealQuest will bring.